All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you guys have not done so already, don't forget to give the video a thumbs up, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Hey, let's get into it this week. We have QE restarting pretty soon. Let's talk about it. So this week we had another up week in the markets, although the S&P essentially closed where it opened, and you can see a little bit of a tail candle there, a shooting star on the daily. Sometimes those can be topping patterns that can bring some mean reversion. However, we've been covering this for weeks now, but the banking system is under a little bit of stress. And if we take a look over here, you can see that bank reserves are pretty much, they're being tapped dry here. We've talked about this. We've covered this as well. SOFR over Fed funds is at 2019 levels. So there is a lot of stress in the repo markets here. We had the Fed, the FOMC on Wednesday. They did cut rates by 25 basis points, which doesn't really help at all, at least in the grand scheme of things. And you can see even with Fed funds at 3.87 now, they were actually rising a little bit into the Fed cut, and yields were on the 2-year green this week. So not really going in the right direction there. Not a good start to the cuts. We also had big tech earnings, fairly mixed bag there. Although some stocks, Apple, Amazon, did very well. But the key takeaway here is we've been talking about this banking stress. One of the stocks that I've been covering very extensively is Blackstone. It's very, and again, this story is very much private credit related, and this company is, to me, a benchmark for private equity. It's BlackRock's essentially arm of that, one of the biggest private lenders, really in the world, if not the biggest. And they've lost the 200 moving average. Stock has been very weak here. Everybody knows Jeffries. We've talked about this ad nauseum. But what I do want to discuss here is the Fed. The big takeaway was quantitative tightening will end on December 1st. And there's a lot of speculation that they will restart QE as early as maybe Q2 next year. However, you can make a case that they have already done that. You can see here that the Fed has pumped $29 billion into the banking system just this past week. And if we take a look here, you can see the move in Treasuries, MBS. So they have not really waited here, have they? And this is confirmed what I have been discussing here for weeks now, which is that there is clearly issues in the banking sector, and there's a liquidity problem. And that's the real reason for them, if you ask me, that's the real reason for them cutting into, or so I should say ending QT. And even if you look at, again, trueflation here, which is historically very deflationist based, I would say. This is their data, and you can see inflation is not coming down here, despite what the media is telling us. So this was not a economic decision, if you ask me. This was a banking system decision here. But nonetheless, we'll see if that does. A lot of people are now calling for the end of year rally, and obviously if they're going to do QE, that could certainly help that out. I do caution, though, I will say, again, we talked about the technicals here a minute ago. Shooting star at an extreme can often bring a pullback, and if dovishness is now priced in a little bit, that can bring in a pullback. And by priced in, what I mean is now NAIM. Fund managers are the most exposed to the market in equities since July 2024. So previously the argument was stocks go higher because fund managers are underexposed, and bears are chasing seasonality in August, September, and October. And if too many people are chasing seasonality, then it's going to go the other way. Well, now they're kind of chasing seasonality to the upside. So we'll see. It should be interesting here. I will say again, just like I said last week, any loss of, we'll call it 6,700 on a retest for the cash S&P could bring in lower prices. We are sitting right back on this trend line again, and as long as that holds, the market can just march higher. But a break of that does bring in a technical test of to me at least 6750, maybe 6700. And again, if 6700 doesn't hold, we'll probably be looking at retesting one of these lows here. So we'll see if that does become the case. But interesting times here, and a lot of things, a lot of moving parts now with the market here. QQQ, again, up big on the week. NVIDIA, now a $5 trillion company. They are worth literally 2 Canadas now. So it's not a bubble, but they're worth 2 Canadas. So you guys can do what you want with that. But nonetheless, we have IWM here. And again, breadth was terrible this week. So IWM is a much better benchmark for breadth since it's 2,000 stocks. And that did finish red on the week. And actually, if you look at the equal weight S&P, that was very much red on the week. We also, if we can look at the McClellan, which measures breadth pretty well. Again, a pretty, a green week on the S&P. When the McClellan was flat. And, it took a pretty good dip here on that move. We also had the trade deal, essentially, it wasn't announced, but Trump said it was, quote, amazing. And the market did not rally after that. So a lot of things may be priced in here. So just something to keep in mind. Dow here, again, up on the week, up 66 cents on Friday. But again, like everything else, it closed pretty much where it opened on the week. Semiconductors did finish up. But again, weekly candle did come in off the highs pretty substantially. We had cloud software here as well. That did finish flat on the week. It was technically negative. Dow transports, they did finish higher. And again, we got to extend these out here. You've been watching this area. And that's your big level, right? So this is our big level here for the Dow transports to clear. And they still have not gotten anything going in a long time. Talked about interest rates a little bit. Let's just look at TLT. So that was down. And again, we've been saying this repeatedly, but just because the Fed cuts rates does not mean that the long end has to follow that. And TLT took a pretty good hit really all week. So rejection at 92, not a good look here. Another thing I do want to point out, speaking of treasuries and the financial system, the dollar yen is approaching 155. That was the last time the Japan intervened in Forex, and that could be bearish treasuries if it gets up there. If you'll recall, a few minutes ago I mentioned the NAIM exposure was the highest since 2024, July 2024 to be exact. Why is that significant? Because that's when we had the carry trade, let's call it a swoon. I mean, we had, I think the NASDAQ peak to trough was 16% in that time period, the NQ. So a lot of problems going out there, and it's probably not a surprise the Fed is getting ahead of this. Housing this week, XHB took a pretty good hit. IYR just cannot seem to sustain a breakout. Big sell here this week and right back down to those previous lows. Banks did finish red on the week as well. XLF down, KRE down. We mentioned Blackstone. HYG finished just negative on the week. Actually, it was decently negative. So it lost that. We lost that rally from last Friday. Reds did tighten up, but as you can see, they did come back in towards the end of the week, and then broker dealers here are essentially flat. One of my favorite trades right now here is oil, and I really like how oil is set up here. I think this has legs to 64 and then possibly even $70. We'll say that's in the medium term here, and that's really technical based. There was a lot of talk about Venezuela. Trump said he wasn't going to bomb them. They did. They denied it. The bottom line is crude finished green despite all that news. And, I'm just going to go with what the market is saying. And the market saying it wants to go higher to me. XLE, essentially kind of backing off a little bit here this week. Same thing with the XOP, but the OIH, oil services, continuing to break out. And that is now a monthly close above the breakdown bar. So that is a failed bear inside bar on the monthly. I think OIH is going way higher. Not 10%, not 20%. I'm talking about 2018 levels here. So we got to clear 350, but this should get up to 450, 500, I think, in the next 12, 18 months. So it's a bold call on my end, but I believe that that is the case. Another right tail I do like here is the dollar right now. We got a nice little W bottom here and a lot of shorts out there in the DXY. You know, fundamentally, the administration wants the dollar lower, but there is a very crowded short trade here, and I think that can explode in the face of short sellers here, and I think we're seeing that with the dollar yen too. Gold continuing to back off this week. Again, we've talked about this much needed correction. Right now, 3,900 gave us a little bit of a technical rebound. A reclaim of 4,200 does give you a little bit more legs to maybe go up and challenge the highs. A lower high here could set up a move back to 37, maybe 35, 36. And these would just be technical back tests of that prior breakout. So again, I'd like to see gold base here for a while. You know, let's establish a range here like we did a few months ago. We've done this before, right? We did it for all of 2023. We did it for the end, you know, the beginning of 2024. We did it in the middle of 2024. We did it in the end of 2024, right? Let's establish a good range here and build a nice base. Same thing for silver. Silver had a nice finish to the week, had a nice robust recovery. But nonetheless, same kind of deal. Would like to see this just base out in range for a little bit longer. Nothing wrong with consolidation after a long, you know, rally here. Platinum here, kind of flattish on the week as well, and palladium, same kind of thing. Copper continuing to hold the gains. It did, you know, it did try to get up to that double top, or I would hesitate to call it a double top, but like a local double top here, and again, basically finished flat on the week, but no real changes. It's still in decent shape here. Lastly, going over to Bitcoin. Again, you know, down on the week here. And I think this is a signal of maybe a little bit of stress in the system. Now the leverage plays haven't been working. A lot of the momentum names like Oklo, IonQ, these quantum names, they have come in off the highs here. And a lot of the time when you have that leverage stress, possibly repo stress, things we've talked about, you even see it in gold, right? The market leaders, whatever is leading, the air comes out of that first before anything else, typically. And anything that's super levered or speculative, right? And we've seen that weakness in alts as well. Nonetheless, Bitcoin's hanging in there this weekend. If this does drop down, I think 95,000 is a very attractive area for this. But it has not participated in the rally in really over a month now. So that said, a lot going on here. We'll see if the market does. We do have that. The Fed is starting to inject here, but fund managers starting to chase the rally a little bit. Sometimes that can cause a pullback when you least expect it. But again, same thing as last week. I think if bulls are holding 6,700 for the most part, we can just base out and go higher. If we lose that, I think we'll test this low, maybe even 6,500. But anyway, with that said, we'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. We'll see you guys all next week.